Hi, everyone. This is Arun from ASIMA Consulting, and I'm having about 34 years of experience in delivering IT capabilities for the business across multiple companies, including about 1.5 years in consulting, along with 10XTD. And 4 years as president of IT in Imami, and 18 years with Hindustan Unilever, and 11 years with Kirloskar Electric. So I'm going to conduct this session on discovering business capabilities for growth and scalability. Just as a setting up context, if you look at IT spending in CPG companies, it varies almost twice the variation of sales and general admin cost. So what does this tell us? It says that where the costs are inevitable, more or less, it's in line with industry standard. And whereas where it is discretionary, where some thinking is involved and decision making is involved, the operating costs or expenses for IT capability investments is varying very significantly. In fact, the variation is nearly twice as much as general admin cost, as you can see. Similarly, there are companies who go with very wide spectrum of capabilities and full scope spending approach in building IT enabled business capabilities, as you can see in the top spectrum. And there are companies with frugal spending approach where the median is around 0.7%, whereas the median for full scope spending companies is about 2% of revenues. Even there, if you look at it, the variation of the least in that cluster and the highest is almost twice in both the cluster of companies. So what it again points to is there is a significant discretion and decision making process which goes through, and the level of spending varies very significantly. So the question is, what makes some companies spend disproportionately higher on building capabilities for the business while others are not? What is that which drives these companies to be what they are? What makes one company see reason for conviction for investment while others are not as convinced? Is it a question of leadership in the company, or the organization culture, or a perspective of an influential person or a team within the company? What's that which influences it? I think if you go through some of the underlying patterns across the company and the way a business organization makes decision, or a leader, a promoter, a professional, or an investor, something which is common across everybody's psyche or rationale for decision making is, am I getting my value for money which I am planning to invest? How do we showcase value? Building a business case for a new business capability, how will you go about doing it? I think myself including, and many of you who are on the call today or who are listening to this, would realize that this kind of question keeps coming very often, and it's not that easy to find an answer for that. So building a case for digital business capability and its value for money is easier said than done. And this is a challenge in most organizations. And maybe that's one of the factor which is influencing in terms of varied levels of investment based on their own appreciation and capability and alignment of the decision makers. So this session is about sharing a proven methodology and approach to discover business capabilities which matter, which can make a difference, define them in terms of what it means so that there is an alignment and a consistent appreciation of that, and build powerful conviction. Business capabilities for growth as well as scalability of the business. So one is accelerating the growth. The second aspect is when you accelerate and grow X times from where you are, you need a capability which can sustain that level of operations and business. So I'll run you through a case study of discovering business capabilities for growth and scalability, which was done for a fast-moving consumer goods company in India, where it was holistically the whole value chain was considered for assessment. I will walk you through the example, including sponsorship and team composition, the process which was followed in this discovery, define, and decide process, value chain overview, KPIs, capabilities, and prioritization framework, and getting a little deeper on qualifying each of the capability or an opportunity, a multifaceted view, a sample I will run you through. In this context, the sponsorship and team composition, it was sponsored by the CEO. He had formed a core team of 6 functional champions representing key functions in the organization, which is supply chain, marketing, e-commerce, sales. Both sales was an integrated function for general trade and modern trade, the HR and finance representatives. In terms of highlights of this exercise, it was a 6 weeks engagement from start to finish. We had identified 34 key value chain elements, mapped KPIs which are current and also some proposed ones, multiple current systems which they are using for their operations today, and various tools like Excel, etc., were mapped as well to get a sense of the convergence or divergence which is there in terms of systems. We also identified key data sets and the limitations for analytics and reporting which existed as of now. And of the 34 elements, value chain elements, from that we could identify about 24 opportunities to accelerate growth and also build a scalable capability, business capability, and of which about 10 opportunities were prioritized. We had also done a gross value proposition assessment in terms of each of these 10 opportunities which we had identified. It turned out to be about 200 crores Indian rupees in terms of the business opportunity in a matter of about 1.5 to 2 years time. which it would take to build this capability and bring it to life. This was the kind of value it would unlock in the business operations, which incidentally is about 20% of the top line of the company. The process and methodology followed was first 3 weeks I spent time in understanding and mapping the value streams, uh, various operations, key processes, uh, KPIs, the current levels of maturity and effectiveness. And then in the fourth and fifth week, identified and qualified opportunity bubbles, uh, defining them, what it means from an organizational point of view, what kind of value it will bring up with its impact, etc. And then we did a workshop to align the larger team, including the board of directors, uh, where each of the functional lead, the core team member, presented to them and sought their feedback, opinion in terms of refining it and also ensure a strong alignment. Post that, we presented the outcome to the CEO along with his core team, the management team. So the first thing which was done in this assignment was kind of map the value chain based on the discussions which we had. And if you look at it, uh, all key elements of the value chain were brought in, wherein in this context of CPG, it is the consumer or shopper who is at the center of action and who makes a big difference to the top line and bottom line of the company. All the influencing elements, like the beauty advisors when you go into a modern trade shop, the media blitz which comes in terms of influencing, bringing in awareness and influencing on purchase of this product, merchandisers who keep things in an attractive way so that it catches attention of the shopper or the consumer who visits that shop. And also from a digital uh, media perspective, the content influencers, bloggers, brand ambassadors, they were brought in. Also the call center people whom consumers can call was also identified. And if you look at the uh, points of purchase or points of engagement with consumer with this company's products, a shopper or a consumer engages with general trade, the mom and pop stores, uh, the traditional retail outlets, modern trade outlets. You could buy from alternate channels through institutional outlets like canteen stores, Department of Defense, or it could be a Central Reserve Police Force canteens. Also through each e-commerce. And there again, there are a couple of alternative channels which are feeding into the general trade. General trade could buy from wholesale or cash and carry like Metro, and then which in turn is serviced by the distributor, and in some cases the satellite depot of the company sells it directly to these intermediaries, and also the end outlets, as you can see. So all these uh, the finer go-to-market channels were mapped and then defined, uh, including some of the key people or the roles like uh, the dealer sales representative, the business development officer, the sales officer of the company, area sales manager, key account managers for modern trade, uh, and seller e-com, e key account managers, basically e-commerce key account managers. So the whole key people in the value chain who influence the growth and scalability of operations were mapped. You can also notice the regional depots which supply to satellite depots. Then there's a national depot which consolidates finished goods from various production centers and third-party contract manufacturing people, as well as import-export channels. Then beyond that, we had also put some of the things are around, let's say, supply chain planning team here, the sales team across the value chain in the segments where they are making a difference, and also the common functions like HR, finance, marketing, quality, regulatory, R&D, etc. So this defines the whole value chain. And then we identified the elements in the value chain, like for example, each of these, it could be an operation or an entity, or it could be a function, as in the case of HR and finance. So these value chain elements, each of them have a role to contribute operations to conduct within the value chain. So 34 such value chain elements were identified in this context. And for each of the value chain element, as you can see here, we identified the key KPIs which impact the leading KPIs of that particular value chain element. For example, if you are looking at a general trade shop, it's the width of coverage, how many products of this company are getting sold, what is the availability in terms of out of stock, etc., and what is the cost to serve for those outlets, total lines sold per day for every billing cycle, etc. Similarly, the salespersons are measured with salient KPIs like effective coverage and TLSD. And similarly, if you look at consumers and shoppers, you have the household penetration and market share, along with values which are currently measured or put there. So as you can see, it gives a pulse of the level of maturity, effectiveness, and efficiency of that element in the value chain. So once you have that, we engaged in conversations of saying, okay, you see this kind of KPI, what is that we can improve in comparison to, let's say, the competition or the industry, or what do you think the aspirational level at which you could operate. For example, here, the beauty advisors in modern trade shops, they track out of shelf on a daily basis, at least twice in a day. And there were about 1,000 plus beauty advisors across modern trades in the country. And the out of stock being very significant, we asked a question, can we use this information for faster reaction? Because anything which is out of stock at the modern trade outlet, the selling point is very, very likely that we will lose sale, because when the customer comes in, he doesn't find the product which he is looking for, right? So how can we use this to speed up out of stock situations being taken care of, so that the product availability is maximized? Similarly, if you look at it on a monthly basis, there was forecasting of sales which was done at some key elements of the supply chain. For example, at every satellite depot or a selling depot, we say out of this 220 products of the company, this is how much the sales team, marketing team, and the supply chain team together discuss and arrive at a number saying I will sell 100. So like that, different numbers for quantities for each of the SKU or a product, uh, out of which, if you look at it, only about 60 to 65% the forecasts were accurate. That means in 35 to 40% of the cases, either it was oversold, that means it was leading to out of stock, or in some of the cases, it was leading to unsold inventory and piling up of unsold stock. So both are an issue, but the most important thing is the one which has gone out of stock, where there was an opportunity to sell more if only we had predicted it accurately. So like this, each of the uh, each of the opportunity we discussed and tried to arrive at what kind of potential exists in terms of driving improvement in terms of growth, and also look at scalability. So you'll see this is another element or another way of depicting the key KPIs across the value chain elements. If you look at this, the Hall India Production Center, the production compliance was 98%. Whereas if you look at in terms of the depots, as we discussed earlier, the availability is only about 65%. We were only 65% accurate. So there was huge opportunity if we were to uh, get our hands together and get more accurate forecast. Looking at the compliance rate of production, it's very likely that it would have been produced to nearly 98% of what was asked, and hence it would have resulted in sales directly. So based on those discussions and the headroom for growth which was available and the scalability potential of each of those opportunities, we shortlisted about 24 opportunities in all. And as you can see here, the opportunities are tagged against the element of the value chain, and they are also categorized as the priority one and second priority ones based on the impact on growth, and in some cases where efficiency matters, for example, in cases of finance, marketing, etc., uh, where it could efficiency could make a big difference on scalability. Further, these opportunities were categorized as whether they are exclusively growth or efficiency oriented, or a combination of both. So this is just to give another perspective to the decision makers, depending on what the leadership team considers as important and a priority and an urgency. They could decide on growth, efficiency, or a combination, depending on what they feel is appropriate in their context. So that's how the opportunities, the value chain was mapped, the elements were identified, the KPIs were indicated, including the currently measured ones as well as the new ones, and opportunity headroom was identified through discussions, classified, and then mapped. And each of such identified and prioritized opportunity, we went into a greater level of detail to make sure that it helps in building conviction of the team members and their extended team, as well as the leadership team, which is vested with responsibility to review and decide on the opportunity. If you look at the uh, definition, a comprehensive definition, we have gone with, let's say, the primary auto replenishment system. That's the name of the opportunity. Gross value proposition, what kind of impact, with very high levels of confidence they had put in. It's about 50 to 70 crores. The lead function for this, because any opportunity, while it could be very closely related to a particular function, it matters to a particular function, there could be other associated functions which influence in terms of uh, effectiveness and value delivery. So opportunity was defined in simple way, saying enhance primary customer service, minimize potential sales loss. What is the current state of it? We have defined in a brief manner. Opportunity in terms of improving it. Here in this case, we are saying move to replenishment based fulfillment, 65% of the business, not necessarily the entire business. That's what they felt, where uh, the distributor operations or the channel operations are digitized is what they felt, where it will have an impact. And similarly, the key metrics which could improve once we realize this capability and institutionalize it, like improved equalization of cover across uh, distributors, reduced out of stock in instances, reduction in order to delivery time because of reliability, predictability, and consistency in terms of calendar of deliveries and order booking, increased width of coverage. Uh, Typically, the tail end of the SKUs out of 220, the tail end tends to get ignored by virtue of its low volumes and visibility. That growth of that gets stunted in a non-replenishment based scenario of supply chain fulfillment. Here we are saying its width of coverage could improve. So we also put in things around change management. Uh, who are the people who get affected, and what is the kind of numbers involved, like distributors 400 plus, sales team 200 plus, customer service officers, commercial team, category managers, etc. So this gives the extent of change management effort planning which is required, and to build storyline around it. Emotional and moral impact on stakeholders, whether it's an high impact or a low impact, which matters quite a bit in terms of the success rate of such capability being realized and institutionalized. The cross-functional impact, so that all the connected functions and teams have a role to play, so which is well defined, so that it does not come as a surprise and they are taken along the journey from concept to institutionalization. Capacity to create customer intimacy, so that which has a very significant impact on sustainable growth and sales of the products. Capacity to support growth, change management challenges, etc. So as you can see, there is a fair degree of holistic, multifaceted view on realizing that capability, what it means, and how, what is involved in terms of realizing the value. So on similar grounds, we had taken up other capabilities as well, prioritized ones. And then we had summarized the uh, identified prioritized capabilities depending on the value the quantified value uh, which was assessed in terms of benefit, and also the feasibility and realizability of it in terms of ease of doing it, etc. So as you can see here, the things on low, medium, high on feasibility, and similarly the value proposition, low, medium, high, and all the capabilities which we had identified are also mentioned here, so that they are able to have a visibility of the entire thing and then take an informed call. So that's how we went about. And when we do this kind of a thing in any of the context, I think a similar process of value chain mapping, identifying key elements, identify the KPIs, look at headroom in terms of improvement with respect to competition, the lateral experience of the teams which are involved, the leadership team, the consulting team, etc. And then arrive at zeroing in on prioritized ones and building conviction with value, impact value it has on the business, etc. On similar kind of situations, if you want to arrive at the kind of KPIs, headroom to be identified, you can look at this kind of a matrix where, depending on the roles in the organization, let's say if it is board of directors, growth and cash flow and profit matters quite a lot. It's primacy. It doesn't mean other things doesn't matter, but I think this is on top of their mind. How do you measure growth? It could be with market share or geographic coverage or dispersion which is there. And by looking at market responsiveness, we could impact the growth. So similarly, the cash flow, you could measure by retained earnings, various elements of value chain and sales effectiveness, etc. So you could use this kind of key underlying themes which matter to various leaders in the organization, functional heads in the organization. Like, for example, business unit or VP would focus on risk and projects. CIO would look at services and excellence and things like this. Yeah. So that's in summary what I wanted to share, that we could drive up the investment rate and realizing full value of business capabilities underpinned by digital capabilities or solutions, how we could convince and then go ahead and realize ahead of competition or remain competitive with the leaders in the industry segment. Thank you.